My next guest says she expects all retailers will have no choice but to raise prices, and that move will benefit the off-price names the most. Joining us for more is Laura Champine, senior consumer analyst at Loop Capital. So, Laura, you do expect prices to go up because of tariffs, or because they can, or because some people are doing it so everybody can? Welcome.
Thank you, Kelly. Because of tariffs. So a 30% tariff is still significant. I think many investors are hoping that we see the global tariffs just go to 10% and stay there. Even in that sort of best case scenario, it's still a pretty significant tariff, not to mention what's happening with de minimis rates. I realize they were slashed, but still very high out of China. I just think there's a lot going on in the supply chain right now, with some countries sort of shut down, others trying to build inventory. It's going to be a little bit of a mess this year, and I do think there will be inflation that historically does benefit off-price companies.
And that inflation, is that real? Because so you're talking about kind of, and let's kind of walk through this. Okay, so companies can't sell inventory. They offload it to the discount chains who have done incredibly well using this model. Why would all of these prices be going up?
The price increases that we expect will be real increases, and we expect that even the off-price companies will likely have to take pricing. They're just likely to take less pricing because they're not locked into specific SKUs. But a real wild card is where these Liberation Day tariffs end up. I think that a lot of us are focused in on Vietnam because a lot of the production that was in China over the years since the first Trump administration have moved to Vietnam. Whether this rate that comes through at the 46% initial announcement or something closer to 10 is a wild card we're waiting for. But we expect inflation everywhere in that kind of environment. Value-oriented retail tends to perform better. I think that's why you've seen companies like TJX have a very nice move year to date. Costco, BJ's, which reports Thursday, very nice moves year to date.
Yeah, Ross Stores, I believe, was our mystery chart that you said, it was part of that category. I mean, Costco has pretty specific SKUs. Every time they've had the same products for like the last 8 years that I've shopped there. So I guess there's some mix with their clothing, if I think about it from that point of view. But you think they'll also be able to dodge some of this, or just the consumer is going to get used to, okay, those, that $19 sweatsuit is now $22?
I think it might be a different sweatsuit from somewhere different, but you're right on some of the grocery and consumable categories. It's hard to move around. Costco, 2/3 of the store in the U.S. is goods produced from the U.S., but even if they see inflation, and once again, I'm not sure any big retailer is going to be able to avoid inflation, their values will still be better than regular grocery. And I think that the customer is going to migrate towards those values at a Ross, at a Burlington, at a TJ, also at Costco, BJ's Wholesale Club.
Have we heard from your coverage universe, a lot of these names we've mentioned, have they said when they might have to start raising prices? Because Walmart is right now out on a limb. I mean, just because it reported earnings and gave that comment, but are they exactly in line with everybody else, or are you hearing something different?
I'm not hearing anyone say they won't be raising prices. I've got a slate of big reporters coming this week, as you well know. We have had some manufacturers and wholesalers already report. They're all looking at price increases. It does seem inevitable, and the question is just how much. Right now, there's some buffer stock of goods that were preloaded from Asia, and how long will that buffer stock last? What happens from here? Just a lot of uncertainty that we're really not used to going into the next quarter.
Yeah.